make sure I am recording. Okay, cool. So last session we talked about fibs, and a lot of people were still hitting me up about fibs. So I want to take this session, I'm going to actually go into depth with them, how to draw them and what they are exactly. So fibs, the fib tool is a tool, right? And this is the fib tool that gauges the percent of a retracement. Okay, so you're going to have a push and a pullback, and I want to talk to you guys about the levels specifically here. Okay, so the 61.8 extension up here is, well, first let's talk about this. Let's talk about these two black lines. Okay, so when you're drawing your fibs, and we'll get into more detail in this in a second, but you're going to start from the push if you're in an uptrend, and when it starts to pull back, that's where you're going to stop your fibs. Okay, so this is what it's going to look like. All right, so the move starts down here, and this is just a quick idea. I'll get into more detail on this in just a second, but it starts down here and pushes all the way up here. And when it starts to pull back, that's when we can draw our fibs. Okay, and these here, I'm going to break these down. These are percentages of this entire move. So the 23.6 is 23.6%. The 38.2 is the 38.2% Fibonacci retracement level. The 50 is actually not a Fibonacci ratio, but price does like to respect the 50% mark. Okay, so I do have it marked. Next, we have the 61.8, which is the 61.8% of this whole move, and then the 78.6%, and then of course all the way back down here would be 1 or 100% pullback from this entire move. Okay, so let's start from the top. Okay, so this level here is an extension that can be used with harmonics or just secondary TP. So this could be TP2 for you guys that are trying to hold through this move. But the most important level for TP is going to be the 27.2 extension, which is this one. Okay, this is the one that price likes to play off of. This is the safer bet for fib targets. Okay, because price normally will come to the 27.2 or get really, really close. Now, it doesn't always go to the 61.8, but you got a better chances of it making it to the 27.2. That's why I have mine marked green. That's for money. Okay, this black line here, 0, this is just the end of this push here where it started to retrace. Okay, this level, the 23.6, you can see price react from here. Now, me personally, I don't like taking trades from the 23.6. I like to use it as confluence when I'm drawing my fibs, and I just like to see that price interacts here a little bit on both sides. When it's coming back to do its retracement, I like to see it kind of play off of it just a little bit. So I like to see something like maybe it'll come down here and it'll bounce a little bit as it's coming down doing its retracement, and it'll just kind of play off of it. And that kind of helps me understand that, or feel confident that I have my fibs drawn correctly. Okay, so that's what I use this level for here. All right, now the 38.2, as you can see, is marked in red. And this is the 38.2% pullback. Price likes to react here at the 38.2. Okay, and of course, we look for other confluences along with our fib levels. The fib levels are just used for that extra boost of confidence and kind of give us an idea of where price should be headed. Okay, so we're not going to willy-nilly just take trades from these areas, and I'll get into that in just a second too when we get in the charts. But price can react from the 38.2, and most of the time when price does react from the 38.2, you see a much faster move. Okay, whereas if it reacted from, say, the 61.8, you're going to see a much faster move normally. Okay, so next we got the 50, which is also basically the same as the 38.2, just a little further back. You will see price respect this quite often, even though it is not a Fibonacci ratio, but the same concepts apply here as the 38.2. The 61.8 is the classic retracement. So me personally, I tend to see this one the most. I also like using bigger swings as well. So, but you can use this on any time frame. And the 61.8 is just the classic, basic, most seen retracement from here. Now, when price pushes from here, it's normally not as fast as it would be from the 38.2, because you see when price is moving up like this and reacts off the 38.2, the buyers are coming in really fast. Okay, they're not giving the sellers a chance to come all the way back through here. That's why it'll react fast from the 38.2. But the 61.8 is most seen, and just like this, you would want to take it to the 27.2, but you're always going to want to be aware of the high, or if you're in a downtrend, the low. And I'm going to break that down in just a second. Okay, so here we have the 78.6 retracement. This is also extra confluence. If you guys use harmonic patterns, you can see price pull back to the 78.6 to fulfill some of the harmonic patterns, which you don't need to worry about right now, but you can also see price come all the way back to the 78.6 and react and go to the 27.2, again, watching the recent swing high or the swing low in a downtrend. Okay, and of course down here, this area right here, this is basically where the swing starts. This is our swing low, right? So I want you to imagine that this is what price was doing on the way here. Okay, price looked something like this, pulled back. This was our swing low. We made a new high. That's how we get our fibs. So this right here is our swing low area, which would also be 100% pullback. Also, a lot of times ends up being structure. Okay, so pay close attention to this area, because you know that price can come all the way back to structure, blow through all these fib levels, and still react down here at structure and continue. Okay, so these are the fib levels. Now let's break down, or does anyone have any questions before I move forward on fibs? Or does it sound pretty good? Y'all get a good idea of what's going on? All good. All right. Bootytron is all good. Good. Sounds good. All right. Sweet. Sweet. All right. So I'm going to delete these. And we're going to talk. I'm going to kind of show you guys. Hold on. My mouse is acting a little funky here. All right. Let's do this. I'm going to show you guys what bullish trend looks like and how you draw fibs, and then how you draw fibs in a bearish trend. Okay. Okay, so in a bullish trend, obviously we're going up, right? We're making higher highs, higher lows. We're creeping up. Okay, so in our trend up, we're looking for our swing lows. Our swing lows are where our fibs are going to start, and then our swing highs are where we're going to end them. Okay, in a bullish trend here. So what I'm going to do is I'm going to take my fib tool, right? I'm going to click where my push originated from. I want the furthest point of that. I'm going to click it, and I'm going to drag it up following the move. Okay? And then you can pull it as far over as you want. You just need to make sure that this black line right here is on the furthest tip before it price started to pull back. And that's how you're going to draw your fibs in a bullish channel. Okay, now for the bearish channel, it's going to be the exact opposite. Okay, so price is coming down, making lower highs, lower lows, right? And here's the same thing. We're going to look for the swing high. That's where we're going to start our fibs this time. And then here are swing lows, where we're going to end our fibs. Okay, so we're going to click our Fibonacci tool. We're going to take the furthest point of this move, where this downward push originated from, and then we're going to pull it down, okay? And that's how we're going to draw them. So are you guys good on how to draw them correctly? I want to make sure everyone knows how to draw them before we get into the market. So if you're bearish, you're pulling them from the top down, you're following price down. If you're bullish, you're following the move up. You're just following price with it, using the swing highs and lows. All right, cool. Everyone's got that. That's cleared up. Awesome. Okay, so let me delete this and let's take a look here. Where am I at? Okay. All right, let's take a look at Euro USD. Okay. So can we all agree that this move down, this is one solid push down? Okay, there's a couple of minor swings on here, lower time frame stuff, but on this time frame, this is the move down. Okay, and this is how we're going to draw these fibs here. I'm looking, let me delete this box. We all know what we're looking at. I'm looking at the tip of this wick here, that, and I'm looking at where price reacted and started to retrace, which is going to be the tip of this wick. So what I'm going to do, just so no one's, let me, hold on. Let me grab my call out. Got the swing high here. And then we're looking at the swing low. And this is in a downtrend. This is in a bearish market, okay? Make this very clear for everybody, because this is getting recorded. Okay, so in a bearish market, we're looking at the swing high, swing low, okay? The reaction points. This is one solid move down. So I'm going to take my fib tool, I'm going to take it, and I'm going to hit the tip of this wick, get this whole move in. I'm going to pull it all the way down to my swing low here. So I'm going to match up my black line right at the tip of that wick, okay? Now, check this out. This is our analyzing time frame. We've drawn our fibs, and if Cody talked a little bit about multiple time frame analysis yesterday, kind of tying that in, dropping down to a lower time frame. So watch here. If I go down to the 1 hour, right, we're looking for those extra confirmations, and right through here we had to push up, right? Our structural point was off in this area, and price ended up breaking it down and sustaining. Didn't get a pullback retest, but she broke the structural point, finally closing on this side, right? Because our structure area was right here because it made this higher high here, and it never made a higher high higher than this one. Okay, so this was our structural point. So once that broke, we had enough confirmation to take the sell down, and there she went. I mean, she blew through the 27.2. So, I mean, easy pip. She even came back down all the way to the 61.8 extension. I don't advise anyone try and hold through that, because the 27.2, A, a lot of times the price is going to react there. And B, you just have a better chance of winning. Like, yeah, it kept going, but you walked away with a decent amount of pips here. After structure broke, you can't really complain about 100 pips, okay? So super simple, super easy stuff. And of course, you can scale in. You know, we talked more about support and resistance, and here was a support, turn to resistance, all through here. So everything was looking really good. Structure, support, and resistance was going well. Fibs gave us that extra confluence of where we should be aiming for. So everything looked really good. All right, so does anyone have any questions so far on what's going on with fibs? I want to break this down like super, make it stupid simple for everyone. So everyone should be like a master at fibs after this. In the last webinar, I was going a little fast. I'm going to really try and slow it down on this one, okay? I feel like a master already. Cool, cool, cool. And this will be recorded, so everyone will be able to see it and feel really solid with their fibs. All right, so looking real good, looking real good. Let's take a look at another pair. What's going on GG? It's an old markup. Just get rid of this stuff. Where am I at? Okay. Okay, here we go. This, okay, like this move here, like watch it. Well, let's go to the daily on this one because this looks like a daily move here. Off in that area. So right here, we can all agree that this is the move that we're looking at here, right? Oh, let me finish this out. This is the move. This is the push that we're looking at, okay? Structure is bearish on the daily. Things bearish. So what I'm going to do is, can someone tell me where I'm going to take my fibs? How am I going to draw them on this move here? Where am I going to start my fibs? That should be masters. Somebody tell me. At the high. That's correct. Are we doing this high? Is this my high? That one? Is that what we're doing? No. That's right, guys. We're starting from this tip here. Tip this wick. Right here is where we're going to start our fibs. So do the same thing. I'll pull it, start my fibs from the tip here, and pull them down to get this whole move. All the way down to my swing low right here. Price begins to retrace. Sweet. Let's drop down. Let's go to the 4 hour and take a look. Okay. So here's our 4 hour. Then structure right here. Look, we have our, oh, let me use this actually. What color is this? Black. I need this to move. Let's make it, let's do red. All right, so we have our push here, right? We're pushing up. We're just following structure through here. Cody did a really good job on structure. I should be masters at that at this point. Okay, it doesn't quite break yet, and then boom, structure breaks, right? Structure breaks often here, giving us that extra confluence that we should be good to head down. And when structure breaks, what do? You have to keep your stop loss above the high, okay? And where are we taking this trade? Where are we taking this trade when this structural point breaks? Renee, so we're using, this is the, let me go back to the daily really quick to show you. So where are we at? Okay. So we're using this high and not this one because this right here, this gets to be like the monthly swing. We're looking for the individual moves, right? So we can tell that price has come through, right? And we're looking for the move. So this was a move and then it retraced. And then this move started from right here and then pushed all the way down to this tip. So this is this one move. This right here is this swing here is a different move. It's a different swing. So I want the original push, catch the swing back, catch the retracement on this push, and then go. See, if I use these, it throws it off a little bit because this swing, this push here matches with this retracement. And I'm looking for a retracement for this push, okay? You gotta section these off. Okay, so like all through here, get rid of this. Check this out. So we have a push down right here. okay? And then we have our retracement to the upside, which will make green right here. And then we have another push. We have our other push coming down, and now I want this retracement of this move right here for this move specifically. Yeah, yes. Okay, and you guys saying the 27.2, you guys are correct. Let me get back over here in this area and redraw these really quick. You remove this. Okay, so we had them from this move. Okay. And yeah, guys, you can see here that price reacted from the 50% line this time. Okay, so GJ reacted from the 50 here, and she did start to react here at the 27.2, but overall she did hit the 61.8 extension, which happens sometimes. Oh man, this ad's gonna get me. It happens sometimes, but don't sweat it. Get out the 27.2 extension and you're good. You got out with pips, stupid pips. As soon as price broke, where's my little ruler? Price broke, structure broke right here, retested, down to 27.2, 350 pips. Super easy, super easy. So we're looking for the pullbacks for these specific moves, okay? And then here, you can draw them just like this. This move here that I excluded it because it was its own retracement. See that, how it went back to the 61.8 and then dropped down? So that's why I excluded that, because this move already retraced, okay? So you guys have any questions so far? It's pretty simple stuff, right? No questions, no questions. We're gonna look at some more examples. All good, okay? I wanna make this super easy for everyone. Let's look at Aussie dollar. What's up, Charles? What's up, big dog? Okay, that was cool. That worked out great. I haven't looked at Aussie dollar in a minute, but okay. So we're on the daily here, and check this out. So what I'm going to do is I'm going to draw my fibs from my swing high down to my swing low, right where price started its retracement move. So I'm going to take my fib tool, I'm going to follow price down, and then what are we going to do? What's our next move? What should we do next? Should I just take a trade from the 61.8 up here on the daily time frame? What are we doing next? Yes, this can work on the 15. I do personally like to use them on the higher time frames, but yes, they do work on the lower time frames as well. Yes. We're going to drop down to the 4 hour and we're going to check and see what's up. So we go to the 4 hour. All right. Look at this. All right. So structure's right here, right? Structure's right here. That's correct, right? Looks good. Charles, you're wrong. Look. I got you, Charles. Can't cheat me, Charles. Price swung right here, made a higher high. Right here. Boom. Right? Our structural point's up here. What happens? Structure breaks. Hey, we pull back to the 61.8 pinpoint. Structure breaks. Flies down. Oh, let me make sure this is lined up correctly. It is. She just missed the 27.2, barely. That's why I don't gun for the 61.8. I always gun for the 27.2, and if it gets that close, I just manually close if it wicks back up like that. Easy stuff, structure breaks. And then here, guys, also, But I wanted to show you guys about the 23.6 level that I was talking about earlier, how I just like to see reaction points. I just want to see price react from that area. I don't necessarily want to take trades from it. I like to see things like this. I like to see these reactions right here from the other side here, here, wicking up off of here. I like to see these interactions here, right here. I want to see price play off the 23.6. I don't want to take any trades from it. I just want to, it's just extra confluence that my fibs are drawn correctly, okay, when price is reacting off of that a little bit. It's that extra boost of confidence is all that is. But again, yeah, she broke, she retested, and she flew down, just barely missing the 27.2. I mean, how easy is that? Is that a Batman? All right, cool. Everyone's clear on my structures here. Everyone's clear why our fibs are drawn like this. Oh, I got it a little off. Oof, she got real close. Stupid simple stuff. Okay, let's take a look at, New Zealand dollar I've got pulled up. Let's see what's going on. Okay, this is a steep swing here. Oh my goodness, I'll pay these ads whatever they want, I swear. All right, so coming down, we can all agree, right? We can all agree that we're looking at this entire move here, correct? This is our push down, right? And this is our retracement back up, okay? We want to catch the retracement sell. That is what we want, okay? So let me get these off here. Move. Okay, I've got 10 minutes left. All right, so right here, here's the beginning of our swing. Easy, y'all gonna be professional fib drawers, man, I tell y'all. Here's our swing low. Okay, take my fib tool. I'm gonna hit this wick, boom, pull it down. Just like so. Now here, this time price reacts off the 38.2, okay? Now, what's the next move? Got my fibs drawn. What am I doing next? Yep, we're gonna go down to the lower time frame for that confluence, that multiple time frame analysis. I want stuff to line up. All right. So our move, our structural point was right off in this area. This was our structural point. Right here is where we had our swing low lead to our swing high, and price never got any higher than that. So we're watching that area, but I'll give it some leeway and I'll draw it as a zone. That's fine. You can do that. Now, she breaks and she just goes, right? She's just going. So how could we have capitalized on this move here? She broke structure. She's bearish. How are we going to get in? Can someone tell me how we can get in this trade? Look for the zone. Look for the zone. There's a support and resistance zone right here. We've gone over this stuff, guys. There's a support and resistance zone right here. We're bearish. She breaks and retests. There you go. Structure, bearish. We've pulled back to 38.2, extra confluence. We've now broken and retested this support, now resistance, right? Any of these candles up here are entries. Where are you going to take them? Right here, the 27.2. It's that simple. I can't make this harder than it is. It's not hard. 240 pips is New Zealand dollar. Play with me. I'll start looking at her again. A lot of pips. A lot of pips and stupid simple, stupid easy. Okay. I'm not quite sure how much time I have left. Does someone just want to shoot me? Let me see. Let me find an area where, because I just realized I think all those were. I want to show y'all a bullish trend here. So let's see. I can't get too far back, or it won't let me go to a lower time frame. Okay, let's just take this move here. Right? Let's take this move here. So this is on the 4 hour. It may or may not let me go down to 1 hour. But this, how are we going to draw? How are we going to capitalize on this? What am I looking for? Where am I going to draw my fibs? 6, 7 minutes. Okay. Someone tell me where I'm drawing my fibs in here. How do I do this? Someone teach me. Bottom. This bottom right here. We're going to start from the bottom, right? Because we're going up. And we're not going high to low anymore. We're looking at this move, right? We're not going high to low anymore. In a bullish trend, we're going low to high. We're hitting our swing low and we're taking it to our swing high, right? Because we're bullish now. Let me get rid of this green box. So look, we're looking at this and this is where this is how we're gonna draw our fibs from here to here. Because we're going up, we're not going down now. We're going up, so we're gonna follow price up. Just as we were bearish, we're following price down, okay? So this is our, let me see if I can go down to the 1 hour and it'll see if it'll let me get here in this area before we end this. Okay, sweet, it's gonna let me see it, awesome. Okay. All right. So here we are. We're coming down. We're retracing, right? Look at this. Structure, your structural point, and I draw it as a zone, is in this area just because this is really close to call in here. So you can draw it as a zone. Take the safer swing and use it as structure. It breaks, it retests. And where do you take it? You take it to the 27.2. Does it extend further? It does. But look, if you try and gun for that 61.8, you'll get cut short a lot of the times. Okay, a lot of times price will stop right here in the middle. Okay, and you don't want to get caught in that. So again, it's that easy. Breaks, retests. They got it on this green one. Stop loss has to go beneath this low. Got to give it some breathing room. Okay, and we're gunning for the 27.2. It's like that. 80 pips, like it's nothing. Easy stuff, guys. Easy stuff. Okay, and I know a lot of people hopped on kind of late, but if you catch the recording, I do break down exactly how to draw them bearish and bullish. Okay, before I got in the chart. So go back and catch the beginning of the video. If you're still a little confused, I know it's about to cut me off. But I hope you guys enjoyed the session. I hope this cleared up a lot of questions.